We own the backbone of the global economy. So we're trying to find good countries, go there and stay there, invest in these things. And whether governments come or go, or interest rates go up a little bit or down a little bit, aren't really relevant to these themes in the long term. You need to make sure you have liquidity, you can fund yourself, and you run good businesses. And that's more important than those general trends. So we're investing for 10, 20, 30, 40, 50 years. And you can't get too caught up in the day-to-day effects.
You've also gone to credit. How much are you expecting that to grow?
Look, what's happened with regulations in the banking system is they've just, it's pushed out credit off the balance sheets of the banks, and the right place where that is being funded from is institutional investors. And therefore, investors like ourselves are continuing to grow our businesses where we're funding these type of products. But it's not, our business is not in competition with the banks, it's actually in partnership with the banks. And as a result of that, I'd say it's facilitating the growth of the global financial markets, as opposed to something that often people talk about it that we're at the wrong time in the cycle or whatever it is. This is going to be growing and happening for a long period of time.
So how big do you expect?
It's going to get big, because remember, this is where most of the capital is in the world, is in sovereign institutional funds. These and pensions. These funds used to be 20 and 30 billion. Today they're 300 billion, 500 billion, $1 trillion and a half dollars. These are large sums of money. They need to put it to work, and therefore it's going to continue to grow for a long period of time. We have in our private equity business, we have a buyout sponsor business, but we're also doing, we're just in the midst of creating a strategy for the Middle East, which will be a separate pool of money. We're creating a strategy for financial infrastructure. Because we think that's the next phase of infrastructure investing is in the financial backbone of the global economy. And a lot of the world has been pushing towards financial infrastructure, and it's not appropriate for our infrastructure fund. But so we're creating a new pool of money to do that. And so there's a fine line between having too many things and making sure your clients who want to be invested with you in that type of area have a pool to be able to do it with us.
Commercial real estate. So a lot of people say, look, this is not the right time. We're going to see a shakeout in commercial real estate. There are opportunities that you see.
Yeah, I think, look, the next story is that interest rates are coming down. Fundamentals are pretty good in a lot of commercial real estate. Of course, there's a tail of some investors that had properties that for this environment, the fundamentals either don't support it or the financing they have can't be supported, and therefore those have to get dealt with. So that's a tail that's getting dealt with within the financial system. But fundamentals are actually getting better. Interest rates are coming down, which means the values are going to improve. And but that tail, there's opportunity coming, and if you know what you're doing, you can pick the right assets. There's a great opportunity here, and
so you're buying.
We are buying. Our opportunistic fund. We just bought we foreclosed on some loans for multifamily in the U.S. recently. We're very excited about that, and we continue to look at a bunch of things. Do
you see anything in Europe?
Absolutely. I think there'll be, the biggest, most liquid markets are in the United States. That doesn't mean, therefore, because they're the most liquid, you always find the most opportunities. But Europe, there's less capital, and therefore there will be opportunities here as well.
But how do you make a difference between the ones that will get better and the ones that actually you should forget?
I would just say it depends on the types of real estate. You just need to, quality wins always. It always has. It always will. And therefore, if the great money can be made in buying high quality properties that have financing problems. That's where the easy money is made, and that's the biggest focus of ours.